So welcome everybody. My name's Scott McHenry. I'm the Executive Officer for the Eastern Alliance for Greenhouse Action. It's my pleasure to present the final outcomes of this project on behalf of my counterparts in the other alliances, NAGA, SECA, WAGA, and also the Department of Energy, Environment and Climate Action, who are the sponsor of the project through the Regional Adaptation Strategy for Greater Melbourne. And that is known as Melbourne's Climate Journey. Mitch, do you just want to move us on? Okay, before we jump right into the numbers, which I know you're all keen to see, just want to take a minute to acknowledge the traditional custodians on the land that we're all joining from. For me, I'm in Melbourne's east. That's the Wurundjeri people. I want to pay my respects to their to the people of the Kulin Nation, their elders past, present and emerging, and acknowledge that sovereignty was never ceded. Next, Mitch. Okay, just in terms of the structure for today, fairly straightforward. We're going to have the team from Natural Capital Economics presenting the results. So we've got about a dozen or slides to get through. We're going to be taking Q&A. So we do have a lot of people in the room. So please pop your questions in the chat and we'll get to them at the end of the presentation. Yeah, just in terms of housekeeping, please do keep yourselves on mute because we've got a lot of people online now. Okay, just for a little bit of context, this project is really about trying to understand the financial risks to council assets, and specifically, it takes a view that councils actually have a duty of care to manage foreseeable risks as outlined in the Local Government Act and the Climate Change Act 2017. And the department took a look at this overarching legislation a couple of years ago and provided some advice that councils actually may leave themselves open to claims of negligence if they don't act on these known risks. At the same time, councils are required to develop long-term asset management plans and financial management plans, and this provides an opportunity to manage some of these risks. And more so, but councils are dealing with impacts on their infrastructure and assets now, and this is front and centre of a lot of the attendees in this particular webinar and councils around the state. So, of course, taking action to try and reduce the risks for hazards that are becoming more frequent and more extreme really involves the mobilisation of resources, and underpinning that is a question around the business case for taking action. Mitch, you want to just move on? So if I was to generalise, I would say that the approach to developing business cases and funding action is quite mature with respect to mitigating emissions. So on the left-hand side of the screen here, if I'm a council and I want to take an emissions reduction project or an energy efficiency project, accessing operating costs information is relatively straightforward. I can extract that from billing data. I can forecast with reasonable certainty into the future where those costs are going to go. I can get a quote for upgrading a particular kit or an asset. And then using that information, I can run return on investment with relatively high certainty. And after I've done the project, I can go and clamp that system and verify the impact of the investment. However, on the other side of the equation, in terms of adaptation, generally approaches are far less mature. So councils are often not aware around which risks are increasing and what are the likely cost impacts of those risks, and don't often have the awareness of what adaptation options or resilience options are available to them. And the metrics used for this type of analysis are kind of new. So these metrics like annual avoided damages are kind of, it's sort of an emerging field, and all of that plays into a space of uncertainty and actually hampers decision making. And that's really at the core of what this project's about. If you want to scroll to the next slide, Mitch. So the objectives of this project are really about addressing that uncertainty and helping to develop a clearer understanding of the costs and benefits of different climate change adaptation options for the council assets and infrastructure owned by local governments right across Greater Melbourne. So it's about developing the evidence base to inform the decision making of councils themselves, but also arm councils with some ammunition to do that advocacy for funding support from other sectors of government, etc. So this work's been undertaken in a couple of different phases now. Kicked off in 2021, and I'd like to do a special shout out and thank you to all the council officers who participated in that work. I think we met with close to 100 asset and facility and operations managers. We asked, you guys provided a lot of data for that phase of the project around the value of your assets and your expenditure on different asset classes. And we developed quite detailed profiles of all the asset classes. And on the back of that, the team at NCE developed a cost benefit analysis framework for assessing different adaptation options. The current phase of work, which is the focus of the presentation you're about to see from NCE, again involved us going out to councils and collecting a whole bunch more information, this time GIS spatial information around the location of those assets, so we could analyse where they're co-located with hazards now into the future. And that's really to inform the base case analysis, the business as usual, or i.e. what's it going to cost councils under the do nothing scenario. And that information and outcomes are contained in the report that's attached to this meeting request. Importantly, the next phase of the project is not funded yet and hasn't started. So that's really about having a look at the adaptation options and trying to work out which ones are the best bang for buck. So the intent of that approach is to ask the big picture question. So are councils better off investing in measures to address heat impacts on roads or storm surge inundation around coastal areas? So I'll leave it there, and I'm going to hand it over now to the team at NCE, and Mitch Perry, who's led this project on behalf of NCE, is going to steer us through their presentation. We've also got Jim and Steph from the NCE team on hand to field any tricky questions. So over to you, Mitch.
Thanks, Scott. Just bear with me 1 minute while I get up the slides. All right, we're good to go. So thanks everyone for joining. Thanks, Scott, for that introduction. It's great to see so many people on the call. I think I just saw we ticked over 100, which is great. So it's great to have the opportunity to share the work we've been doing with you all. So my sort of focus over the next 20 minutes is to provide an overview of the work we've been undertaking. So that's going to include summarising the approach we've gone through, talking through the results, talking about the project outputs, also touching on some of the opportunities for improvement, and finally recapping the recommendations which are in the report as well. So jumping straight in from a high-level perspective, the focus of this project has been to estimate the value of damages expected to be caused to council assets from climate hazards across Greater Melbourne. These results provide an estimate of what we call the base case, or the do nothing differently scenario, which is the outcome for assets without any climate change adaptation. As Scott sort of referred to, understanding the base case is really important as it provides the business as usual scenario, which we can use to understand if investing in adaptation options is going to be economically viable. Also, as Scott mentioned, so this project's based on a cost benefit analysis framework. So that's the same type of framework that underpins most business cases. Specifically, we use the framework that was developed in phase 1, which is currently available on the NAGA website. And we focused on just the first 3 steps of that framework to value the base case, but the outputs in this project would enable the remaining steps to be completed and to undertake that full sort of complete CBA of adaptation options. The scope of this work is direct damages to council assets only. So that's physical and structural damage to assets. The project doesn't consider indirect impacts like disruptions to council services or local businesses. It also doesn't consider intangible impacts like impacts to the physical and mental health of community members. The figure on the right sort of helps to show what hazards and assets are in scope. So for assets, we've considered buildings, roads, drainage, and natural assets. We've also considered built assets in open space, which is things like street furniture and lighting. For hazards, we've looked at bushfires, coastal flooding, heat waves, and inland flooding. We didn't quantify damages for severe storms, but the final report, if you've had a look, does also include a case study discussing those impacts, which is hopefully helpful. The approach we've used is a risk-based approach to quantifying damages. So that is where risk is based on the likelihood of hazards occurring and then the expected consequences of those events. So that's a similar approach to how an insurance company might, or the insurance sector might value risk. This approach leads us to estimates of damage in the form of average annual damages, which reflect the average damage that is expected to occur in any one year from a range of different probabilistic events. That risk-based framework is shown on the right-hand side of this slide. So the risk framework is sort of the green boxes, and then we've got some grey boxes there highlighting information or inputs we used into those into that framework. So if we look at those boxes, so starting from left to right, we've got information on exposure. So that's information which shows what assets were exposed to each hazard, and that's primarily determined through spatial analysis. We also had input information on sensitivity. So that's to what degree an asset is expected to be damaged by a hazard. We've also got information on replacement costs. So that's that was information which we collected as part of the first phase of the project, so directly from councils, and we use that to sort of put to monetize those damages and cost them. This is the first slide we have of results. So this is presenting the base case results in the chart on the right-hand side. So that is, it's presenting the estimates of average annual damage to all council assets from all the hazards we looked at across Greater Melbourne and for the 3 different time periods we looked at. So we looked at present day, and we also looked at the nearer future, and then we looked at a more distant future scenario. So that nearer future scenario aims to sort of reflect a 2050 sort of climate scenario, and then the more distant future scenario looks at a climate scenario around 2100, and they're both using RCP 8.5 scenarios or assumptions. In the chart on the right, you'll see that the results are represented by both a grey line and then sort of a green shaded area. So the grey line is the most likely estimates from our results, and then the green highlighted area is the range in possible outcomes. And so I guess drilling down on those values, so what it's showing is that our estimates are in present day, the estimates of average annual damage to council assets is between $90 and $120 million. In the nearer future, that's jumping up to $210 to $300 million per year. And then in the more distant future, so around 2100, we've estimated the damages are increasing to as much as $400 to $540 million.
Yeah,
so
okay.
Some pretty significant increases there. All right, so this slide is also presenting the base case results, but just in a slightly different perspective. So it's disaggregated the results by hazard and then by asset type. So the columns represent levels of damage from each hazard in that chart on the right, and then the colours within those columns are representing the different asset classes. From this chart, we can see that collectively it's heat waves which are found to cause the highest value of damage to assets. That's followed by coastal flooding and then inland flooding. And it shows bushfires have not really been found to cause significant average annual damage relative to the other assets. So I guess the fact that heat waves are causing such a high degree of damage to assets may be somewhat surprising, as you wouldn't expect, I guess, the impact from all the damage from any one heat event to cause really, really significant damage. However, what we've found through our work is that it's these minor impacts, because they're occurring much more regularly and to a much wider range of assets compared to the other assets, or compared to the other hazards, it adds up to something really, really significant. So that's what we're seeing there with the damages from heat waves. On this slide, we're showing the base case results by asset class. So this table, it's showing that the highest value damages are actually expected to occur to roads, and then it's followed by natural assets and then buildings. That's consistent through time. And then damage to drainage assets are found to be significant, but perhaps less so, or less, not as high as damage to the other asset class I've just mentioned. And then damage to build assets in open space are found to be relatively minor. Excuse me. The table on the right is also showing percentage changes in damages through time and sort of highlighting how significant they are. So for example, if we look at that top line and damages to buildings, we can see that average annual damages are increasing from 20 million to 40 million, and then to almost 90 million in 2100. So that's an increase of 100% and then over 300% from present day to the near future and more distant future scenarios. Excuse me. So just wanted to reflect on why you're seeing those increases. So in general, these increases are reflecting increases in frequency of hazards due to climate change, and then they're also reflecting larger hazard extents, which means that more council assets are becoming exposed to the hazards. So that's why the damage values are increasing. In the table, we actually see, I believe it's drainage assets that have the most significant increases in values of damages. And in that instance, the big jump sort of relative to the other asset classes is being driven by significant increases in damages from coastal flooding. In the report, and that's something that with the more detailed results, I'll share the outputs of the project, you'll be able to drill down on and have a look at for yourself. But so in the report, we've also shown average annual damages on a council by council basis and how they're increasing as well. And so those sort of drivers I've just mentioned are also the key drivers of why there's increases in damages for the councils as well. And like drainage, some of the biggest increases in damages for the council values relate to steep increases in damage from sea level rise and storm time inundation. So it's those coastal flooding hazards. And so that's why I've referenced on the slide there, those outlier councils. So there are some with some really significant jumps in damages, and that's, yeah, most of the time it's attributable to the coastal hazards. So the results I've just shown sort of highlight the fact that climate hazards under climate change are going to have a significant impact on council assets through damage. And they highlight the need for councils to take significant action to both adapt and to, I guess, try and reduce those associated costs. And we're hoping that the outputs of this project will help councils to work through this and deal with this. So I just want to talk through what those outputs are. So firstly, we have the report, which was provided ahead of this meeting and details this project in full. That report also includes one-page summaries for each council in the Greater Melbourne region, which enables everyone to sort of see the local impacts. The report also includes maps to help show how councils compare against councils in similar regions. So compare the damages, and they're split up by hazard. There is also an Excel spreadsheet sort of set up in a dashboard fashion. That's what's the picture of on the right-hand side of the slide. Again, that can be used by councils to drill down further on the results. So to help get an understanding of where the impacts are coming from, which hazards, etc., and to which asset classes. As Scott just reminded me before this meeting, there's also GIS layers. They're not quite ready yet. They're currently hopefully being broken down on a council by council basis. So there'll be layers showing the assets and intersections between the hazards, which hopefully will be of use. And all of those outputs are going to be up on the eager website. So that's where you'll be able to access them. Put a link to the website on the slide deck, which we'll also circulate, but they're not up there just yet. And then finally, the other good resource for councils is the CBA framework, which was developed in phase 1. So it's still up on the NAGA website. It's really helpful for understanding the process we've used for this project and how the damage estimates were calculated. But it's also really helpful for understanding how these results could be used in a cost-benefit analysis of different adaptation options in the future. So as I mentioned, I also wanted to touch on some opportunities for improvement. So through this project, we've identified some areas where refinement to the data and inputs would improve the results. So one of the reasons we have got opportunities, I guess, for improvement is that we relied exclusively on sort of pre-existing and mostly public data sets. And so some of the opportunities for improvement in our estimates come from, having more up-to-date and fit-for-purpose data. On the right-hand side of this slide, I step through some of the other opportunities for improvement. So that first one sort of relates to what I just talked about, though, ensuring all the data sets used reflect the very latest climate projections, which wasn't always the case in the data that we had. It's also important, where possible, to assess the damages from a wide range of probabilistic events. The work we've done focuses on damage from larger events, just because of data limitations, but we recognise that it would be valuable to go and also incorporate impacts from some of the smaller, more frequent events, which we recognise can be costly just because they're constantly repeating, even if they don't, I guess, cause such widespread damage. There's also a point there about incorporating depth data to more accurately assess damages to inundation. So we didn't have that data available to us across Greater Melbourne, but that would really help with assessing damages from inundation. We've also got a point there on refining sensitivity assumptions. So that's drilling down a little bit further to try and understand more about to what degree each asset will be affected by the different hazards. So that's in doing that, we've drawn on the practice note 12.1 climate change impacts, but and we also did some consultation on that, but I think it's an area where further refinement could be of benefit. And then finally, we also think there's an opportunity for refinement around the replacement costs we've used. So in the first phase, to enable sort of more efficient data collection, we collected information on costs at quite a high level. And that was really beneficial and really valuable information, but there's still perhaps an opportunity to drill down even further to refine those estimates of replacement costs. One other thing that I wanted to highlight is the fact that we undertook sensitivity analysis to understand which of the inputs we used in the model are contributing most significantly to the variance of the results. And the details of that can all be seen in the final report. But in summary, it highlighted the fact that if we want to sort of refine and reduce the variance in the results, the key place to start is looking at the inputs associated with roads, which we've identified as being significantly impacted by heat waves, and so significantly impacted by all hazards. And then other key points to drill down on would be their impact or the sensitivity of the roads to heat waves, and then also what their replacement cost is across the Greater Melbourne area. One other point to mention here in our sense checking was the fact that we have compared our work to SECA's asset vulnerability assessment, and we've also looked at how our inputs compare to some work that's currently being undertaken by Infrastructure Victoria. So we did that just to sort of try and get as much alignment as possible between projects so that the results are comparable. All right, so this slide is highlighting the recommendations which are made in the report. As I mentioned in the report, these don't need to be undertaken sequentially. So there's 5 key recommendations. The first of which is associated with refining the base case estimate. So that's largely relates to those points I've just highlighted where there's opportunities for improvement. The benefit of doing that is that by refining those estimates, you're going to be able to develop more robust business cases. The second recommendation is about giving consideration to indirect, tangible and intangible impacts in the future. As has been raised in sort of a number of times through the consultation, these impacts can be significant, if not even more significant than damage to assets. So they need to be factored in into decision-making in the future. The third recommendation focuses on undertaking cost-benefit analysis of adaptation options, which so enabling CBA is one of the key aims of this project. This is going to help with councils identifying economically viable adaptation options. It's also going to help with obtaining funding to implement those projects. So that's a really key recommendation. And on the right-hand side of this slide, I've put some sort of example adaptation options just to help highlight what they could be. So that includes options which would reduce hazard severity. That's options that would reduce asset sensitivity to those hazards. And then there's also options to reduce asset exposure. The fourth recommendation relates to integrating climate change considerations into long-term financial plans. So this work has shown that costs are expected to increase significantly. And so there is a need to start communicating that cost into long-term financial plans in order to be adequately prepared. Fifth point is to begin incorporating climate change considerations into asset management practices where they're not already being done so. So that includes actions like increasing the knowledge of asset management staff, taking advantage of opportunities to improve the resilience of assets when they occur. So the Build Back Better approach. Also, measuring and reporting on impacts of climate change would be a valuable thing to do. That'll create that evidence base to look at what the actual impact is. And then finally, ensuring any new assets are resilient as a starting point where possible. So to close, I just wanted to quickly recap on some of the key takeaways from the presentation. It's also a good opportunity just to highlight on the right-hand side one of the maps that we've produced for the work. And you'll see a couple of those in the report. Those are the maps to help sort of visualize the results and compare councils in similar regions. So as I've said, so we used a risk-based approach. So that's similar to how insurance companies value risk. Point one, the results are showing that average annual damage from climate hazards to council assets is increasing significantly with climate change and without adaptation. So I guess this work reaffirms that need for action and adaptation. There's going to be opportunities as new data becomes available to improve the estimates of damage, and that will be important for the delivery of more robust business cases and help strengthen funding applications. Point four is around resources. So as I've highlighted in this slide deck, there are resources available to assist council to better understand both the local impacts through the Excel spreadsheet that we've got and the report, the appendices in the report. And there's also that CBA framework, which helps set out the steps or next steps to undertake cost-benefit analysis. And then final point is liking cost-benefit analysis, that these results aim to support decision-making only. So there is a need to consider these results alongside other existing information you have when making decisions. And so I guess that's just highlighting that there is a need to not forget about those indirect and intangible impacts, that you need to consider them alongside the results of this work. That brings me to the end of my slides. So I hope that was clear and everyone was able to follow along, but if not, here's a good chance to ask some questions. So I might hand back to Scott to facilitate.
Okay, thanks, Mitch, for that excellent summary. And I will refer people back to the full report, which is included in the meeting invite if you'd like to jump into some of the detail. I noticed that there's been some questions coming in on the chat, and the team at NCE have been already doing a good job of responding to those, but I might just circle back on a couple that sort of come up a couple of times, just relating to the scope of hazards and whether and the treatment of drought within the analysis. Do you want to speak to that one, Mitch or Jim?
Sorry.
Mitch, I'm quite happy to. Yeah, so Scott, I guess it's one of those things that the scope of this project is very much sort of focused on those tangible and direct sort of impacts on assets. What you tend to sort of find with a lot of drought type situations, and particularly, you know, the extending periods and frequency of droughts and things like that, is that it can impact on both the asset a little bit, but often it sort of bounces back. But it's actually more the amenity value associated with the parks. And so you think about sort of visitation to parks and things like that, you're much less likely to get as much enjoyment out of a park if it doesn't have nice green grass and all the vegetation is looking very, very sad, and there's no water features or anything like that. Though the framework is deliberately designed to actually allow to incorporate those types of risks and so forth as well, but realistically, just within the scope of the resources and the timing and the data that we actually have for this project, given the fact we're trying to sort of cover so much, we couldn't actually include it in this. But the framework is designed to allow for those indirect, tangible, and intangible impacts as well. And certainly we have done that in other projects we've been working on, where been a much smaller geographical focus and things like that, so we can really sort of dive down and take a deeper dive on a smaller area.
And just on that applicability of the framework to the non-metro councils, of course, the metro councils have just been the subject of this number crunch, but you can use that CBA framework just as you can for the regional or councils in other areas of the country.
Yeah.
And it's also applicable at the project level. So a council could use that if it wanted to assess potentially two different forms of drainage on a road duplication or something like that. That framework could help them understand the costs and benefits of two different adaptation measures, correct?
That's right.
Yeah, exactly right, Scott.
Excellent.
Yeah, and the framework is being deliberately designed to sort of pull together those climate risks and, you know, thinking about adaptation and options for adaptation, and a relatively standardized cost-benefit analysis framework. And the rationale for doing that is because that cost-benefit analysis framework is the one that's used by decision makers all over the world. If you think about, you know, it's consistent with, you know, Victorian Treasury and Finance guidelines and so forth. It's how you actually sort of convince, or hopefully how you actually convince your people who are in charge of your budget within council in terms of how they actually allocate resources and make decisions about how to actually allocate resources to climate change adaptation and risks to projects and assets.
Very good, thank you. There's another one here. It's kind of around that scope thing too, specifically around what's included in the natural assets and how it cuts across any of Melbourne Water's role in Greater Melbourne. And I think in terms of the data collection, we collected GIS spatial information, and so any of the natural assets that are under the maintenance or are owned by councils would have been put into the analysis if it's captured in that GIS data level. So it wouldn't have captured any other assets managed or owned by other state government agencies. But in some ways, we were reliant on their data for the analysis when it came to the hazard analysis. So we mentioned that some of the limitations in the data sets were particularly around inland flooding. And it was the Melbourne Water data set that was 1 in 100 year extents that didn't incorporate climate change into their layers, and it also doesn't incorporate depth information. So in terms of, in many regards, much of the damages are really just the tip of the iceberg in terms of the estimates. They're very, very conservative numbers. We're expecting the actual numbers to be quite a lot higher because of the scope and data limitations for the project. Anything else to add to that, Mitch and Jim?
Scott, yeah, absolutely. And I guess, just sort of getting back to Mark's sort of question around that is that it is one of those challenges that we find working with so many local governments that, insofar as their natural assets, think about, your vegetation assets and things like that, they're not sitting on an asset register because effectively, often council didn't actually invest in them to start off with, so they don't have an economic value sitting on a balance sheet or sitting in an asset register and things like that. That creates a real challenge when you're actually looking at how do you actually manage those assets and actually attracting resources to actually manage those assets. A bit of a plug for another project that we've done on the Horticulture Innovation Australia website. There's actually a tool called the tree costing tool. And in that, you can basically sort of put in sort of characteristics of your vegetation and so forth. It'll actually give you a cost of effectively replacing those trees and so forth. And part of the rationale for that is that so that council officers could actually establish a financial and economic value to actually sort of put into their asset registers and start getting those assets actually registered and managed properly, and actually attracting the resources to actually manage those assets. So Mark, yeah, absolutely right. There's limitations in the data. When natural assets are on everyone's balance sheets and council and so forth, Mitch and I can retire. Our job will be done. I don't think that's going to happen in the short term. It really comes down to how you guys can actually sort of pull your data together.
Very good.
Mitch, anything else you want to add on that one, Mitch?
No, I think that you've covered it pretty well. Just sort of in the back of the report, we've included a summary of what data was provided. It's pretty high level, but it does incorporate which councils provided us information on natural assets and which councils provided us data on other types of assets. So that will help you understand what data was included.
Okay. There's a question here around roads, which came up in the analysis. Roads were sort of one of the big ticket items, and being particularly being impacted by inland flooding and heat. There's a question here from Mark. Are you talking about road pavement failure? My take on this is that the damages that were assumed in the model are directly drawn from the IPWE practice note, the Institute of Public Works Engineers Association, practice note 12.1, which is available online. Is that how the damages are captured in the analysis, Mitch?
Yeah, so it's the practice note provides sort of qualitative information around impacts, and then we've sort of adapted those to make them quantitative. So yeah, for roads, we've drawn on that information and then applied it to across all the roads, depending on the hazard, to how much impact it has.
Yep. And Mitch, just to add to that, we're currently doing a project for Infrastructure Victoria looking at climate change hazards to road assets. How to actually quantify that in a much more robust fashion as well. So again, and effectively, within the modelling that we've done, there's effectively a bunch of functions, cause and effect type relationships. The model has sort of been set up so you can actually sort of update those as information gets improved and so forth as well. So through that current project we're doing, we'll get a much better handle on what those damages really are. The other thing to sort of remember too with roads is that it's not necessarily picking up sort of the indirect impacts, particularly in terms of nuisance values where you can't actually access your favourite transport route and all of those types of things as well. But in other projects where we've actually had the resources to do that, we have actually sort of estimated those values as well, and it all fits within the same framework.
That's great. And we've got our friends from Infrastructure Victoria here in the webinar today. So we've had some of their team participate in our project control group, and their analysis is also looking at statewide roads, but also electricity supply infrastructure and the health sector. So that work is happening in parallel. And we've been making sure that we are aligned where we can in terms of the quantitative parts of our analysis. And this, I guess, is a good segue to one of the questions here in the chat around the rationale behind the choice of the RCP 8.5 scenario. This was a decision of the project control group some time ago in the project, and we decided it was the most appropriate and prudent way to go, using the stress test approach that had also been applied by Ambulance Victoria and some of their work, and was appropriate to the fundamentals of risk management, and the fact that everything the science says is telling us that we're tracking on the 8.5 scenario anyway. So we didn't want to intentionally overload it with too many possible futures, and just keep the analysis around the worst case scenario. And I think the reader benefits from that when they read the report as well. Anything to add to that, team?
Scott, probably just the other thing I'd sort of mention too is that particularly in the next sort of 30 years, there's virtually no difference between the 8.5 and the 4.5 in terms of how the hazards tend and the exposures tend to sort of come out through the mapping and the modelling. The other thing too is that, again, you can keep on updating it as information improves. The other thing too is that while you might sort of think that's it's a bit of a doomsday scenario in terms of the climate, because of the scope, the relatively narrow scope of the impacts that we're actually picking up on in the modelling. It's actually quite deliberately conservative anyway, which probably more than offsets any sort of error that you might actually sort of have in the climate and the assumption around which RCP you're actually using. Great.
There's a question here just around the impact on soils and specifically buildings. So it's the alternation between drought and high rainfall on clay reactivity, driving instability in soils, and to what I presume the question's asking, to what extent that's being picked up in the analysis. And again, these assumptions are coming through from the IPWI practice note. Is that right, Mitch?
Yeah, so we haven't considered subsidence within this work and within the scope. I think we'd be hard pressed to find appropriate spatial data to do that analysis and see how things compare across the Greater Melbourne area. So yeah, it's not something that's it hasn't been factored in these damage estimates.
Yeah, and I think that's one of the limitations of what I call these top-down analysis versus a bottom-up type of approach, where you actually walk out onto site and you have a look at some of those site-specific conditions. So something like the Building Vulnerability Assessment Framework was developed by Eager and Naga some years ago, contains a look at this, and it would help you guide you through that process of looking at the soil and foundation issues that you might come up with. Okay. There's a question here around the adaptation options. The adaptation options are, I guess, the next phase of this project, which I mentioned we haven't had a chance to look at it yet. So nothing's on or off the table, but that will be limited by our financial resources that we can either get through contributions from councils or through a grant. So if you are interested in this space and furthering this line of questioning and research, please do get in contact with me or your Friendly Alliance coordinator, and we can start thinking about how we can co-fund that next piece of work on the adaptation options. I'm struggling to get through all these questions here. Another question here around the intangibles and the ecosystem service benefit of open spaces and how those can be quantified. Any comment there from the team at NCE?
Do you want me to go first?
Well, I can highlight that we haven't focused on that in this.
Not in this particular project, but in other ones we have. And there, what we've really sort of focused there on is that working with the biophysical scientists and the team, across the team, and from council and the clients and so forth, really trying to identify what those ecosystems are. Going through the mapping process, looking at the ecosystem functions, identifying scope and ecosystem services, and then actually what we typically have to do is actually use a number of different approaches for managing the different ecosystem services. So to give you a bit of an idea, if it's a if it's an ecosystem services service which is about sort of urban cooling and things like that, you can actually have a look at what's the equivalent sort of energy cost to bring sort of the thermal comfort within buildings down and so forth. So you can look at those types of things. You might be having a look at sort of carbon sequestration, the amount of carbon that might be produced by a mangrove system, and all sorts of different things. So long story short, there's lots of different ways of valuing them. None of it's perfect, so we have to do a lot of sensitivity analysis around that, and often there just isn't necessarily locally relevant or locally specific data that we can use. And so then what we tend to do is then use an approach which economists call benefit transfer, which is basically you're inferring values from similar studies in similar types of environments elsewhere to bring that into valuing the ecosystem services. It is a lot more work. It's quite data intensive. It tends to be a little bit more controversial. People understand damage to direct damage to tangible assets, but it's very, very important to try and bring that in as much as we possibly can. Once again, the framework has been deliberately designed to actually allow for that if you have the resources and the data to actually do that.
Okay. Just trying to look at the next question. In terms of that indirect relationship, indirect impact and other impacts, is there any sort of multiplication factor that can provide sort of, rough high level numbers without getting into another big number crunch?
Scott, short answer is yes. I can't remember the ratios off the top of my head, but the CRC for Natural Hazards and Ernst & Young have done some analysis. There's a report you'll probably be able to find on the web pretty quickly called The Cost of Natural Disasters in Australia. And effectively they've come up with sort of rule of thumb ratios for indirect tangible and intangible costs as ratios to direct costs, or different types of natural disasters. And I think off the top of my head, both of the ratios are actually above 1. And so so if you've got $1 million worth of damage, by the time you look at the indirect tangible and the intangible, you've probably got true costs that are above $3 million. So hence, the analysis that we've done is relatively conservative because of the scope.
Yep. Tip of the iceberg, indeed. Okay, there's a question here, and there's references to the insurance sector in the report, and Mark here was mentioning that insurance industry is probably going to have some good data in this, and I expect the banking industry also has some good data on this. I remember seeing some reports by Commonwealth Bank a few years ago about the risks to their mortgage portfolio, and I know SECA have been doing quite a lot of engagement with the Insurance Council in Australia, and I think we were wary when we went about this project that there were data sets out there that were owned by other entities that would be great for analysis, but we just couldn't get our hands on them. And so those information barriers are always going to be, I guess, a barrier to this type of work going forward.
That's right. And Scott, just to sort of add to that, it's often the thing too is that if you think about sort of assets like roads and things like that, councils tend to, and local and state governments tend to actually self-insure for those assets. So they're not insured through a private market. So there's not necessarily a price signal related to risk for those. Part of the process of looking at sort of damage to buildings and things like that, there's this concept called stage damage curves. You think about sort of flooding. So, the deeper it is, the greater the proportion of total damages that actually occurs. The stage damage curves that we've used, we've actually developed that up through previous work that we've actually done where we've actually got data from insurance claims and so forth. So So, so we're largely using very, very similar sorts of data sets and so forth as well, where the insurance sector actually has data on those particular risks and hazards and those particular asset classes.
Okay, thanks, Jim. Question here from Adrian, just around the relatively low impact of fires. Is there a discussion in the documents about it? Mitch, do you want to take this one?
Yeah, it's included. There's a bit of discussion there in the report. So we used the bushfire management overlays and the bushfire prone areas to look at assets at risk. But with those layers, there was no probability assigned to what the likelihood of fire is. I mean, it's a pretty tricky thing to understand on a large scale, because the risk of fire depends on a whole heap of different factors, including, the slope and how much vegetation management's gone on. So all the assumptions we've used to sort of think about what the likelihood of fires would be is included in the report. And they were based on some recent academic literature. So that's how we've landed on those values.
And there's a follow-up question there from Roland around the impact of heatwaves, but also bushfires that are along roadsides and its effect on the road. I understand that our analysis didn't quite capture this, but I believe this is an area where the Infrastructure Victoria work is looking into by using some exemplar projects. So it's that service disruption kind of impact of the bushfires and other hazards to those roads networks. So there will be information being provided through that work, but it's not captured in this particular project.
Mm-hmm.
So Scott, it's very much a case of watch this space.
Okay.
Just on that, Scott, so that you can see in the back of the report, we've got all of our input assumptions included. So you'll be able to see what for each of the different hazards and each of the different asset classes, what assumptions we made around the type of damage that would occur from each of the different events. So that's in there. And then, as was alluded to before, we've also provided the model. So in theory, in future, you could easily alter those assumptions and see how the results would change.
Okay, almost to the end of the Q&A, I think. Can we assume the Department of Transport has already completed this type of analysis for public transport infrastructure and trains of transit? I'm not sure if we can assume anything, but if anyone's got any intelligence on the work that DOT are doing in this space, please do share. I'm not aware of anything myself. What is the opportunity there for more questions once we have seen the final report, please? I do understand you haven't had proper time to consider the report. It was only added to the media request on Monday, so you should have a copy of it already. If not, you'll be able to find it on the EAGA website shortly, but please feel free to just direct any questions you have to myself on email. And we can deal with those outside the meeting, which has only got a couple of minutes left. But I think I've otherwise covered off on the items in the chat. So I might just wrap things up at that point. I do want to take a moment to thank the team involved. So the project control group, so the Victorian Greenhouse Alliances from the metropolitan region, but also the DELP Climate Science team from Infrastructure Victoria, and particularly thanks to Shirley and Mel and Dana at the team at DECA. It's been great working with you all, and a special thanks to Mitch, Jim and Steph and the team at NCE, who have done an incredible job with this project. It's been great working with you all, and I'm going to wrap it up and stop recording and thank everybody for joining today with 2 minutes left.
Thanks, Scott. Thanks, everyone.
Thanks, everyone.
Great to have all your participation.